Welcome to Raise and Deploy, a podcast dedicated to international investments with insights from the world's leading investment professionals from New York to Timbuktu. Each episode, we bring on a new guest to discuss the trials and tribulations that occur when seeking substantial returns in foreign markets. We cover the full life cycle of an investment, from the moment you contemplate raising capital offshore to the final check cashed on the returns. In this episode, we bring on my close friend Dan Rummery, partner and co-founder of Brunel, a boutique capital advisory firm based in LATAM. He discusses his background and how he got started in the international investing world. We explore the changing tides of investing in Brazil over the last 15 years and his personal investments, along with all of the other locales outside of Brazil that seem ripe for investment. Let's get into it. Dan, welcome to the podcast.
Hey.
Welcome. So Dan, we've known each other for 10 years, but I don't really know what happened before that. So tell me a little bit about how you got your start into financial markets and, so take me right to the beginning.
Yeah, sure. So it's a little bit of a crazy story. I ended up leaving university in 2003 and, didn't have the financial resources like a lot of my friends to go on gap years. So I needed to find a job. And, I was reasonably good at rugby, and I had the opportunity to move to Switzerland to start playing rugby for a minor team, which paid a little bit of money, and look for a job. And luckily, one of the gentlemen that was one of the senior players in the club was kind enough to offer me a job in his company, which was called Tara Capital. That was a placement agent, mostly for hedge funds at the time. At that stage, I just didn't even know what a hedge fund was, but I quickly learned. I think he saw something in me, which was the ability to be a good sales guy. And, very quickly, with a lot of hard work and a lot of good timing, I ended up being pretty successful.
That's great. What a story. I love hearing stories like that. So talk to me about the next couple of stages that you had within Tara Capital. Like, how did you make the most of that opportunity?
It comes back. The first part was, as I said, it comes back to timing. So this was the bull market of hedge funds back in the day of 2004, 5, and 6, where the champagne was flowing and money was flowing into funds left, right, and center pre-financial crisis. So, of course, you needed to have good product, which we had. You needed to have a good sales team, which I quickly learned and became. And with those two things combined, I was pretty successful and able to place roughly around $650 million in that period into a few different funds.
Can you tell me a little bit more about the funds that you were investing from?
So most of this comes into why Brazil, even though, in fact, we didn't arrive in Brazil until many years later. So at that stage, the first few funds were mostly European long-short equity funds, and a couple of global macro funds that we were raising money for, mixture of US, European based. And then in 2006, remembering I wasn't a partner at this firm, the guys selected a fund from Brazil, which was called Vision Brazil, a fund run by Amari Jr. And I was very active in the fundraising there. I was able to raise, of that 650 that I raised, probably $300 million went to Vision. So, and that gave me my first interaction with Brazil. Actually, I came down to Brazil in 2007 with my boss and spent a week here and kind of fell in love with the country when I was down here. That was the only business activity at that stage, but it was a great interaction and eye-opener to see the opportunities down here.
Great. And so that brings you to Tara. What happened at Tara? Like, why are you still not there?
Yeah, so again, it comes back to the opportunities and timing. So the guys ended up selling, the partners ended up selling Tara at the end of 2007, early 2008, and they came to me and said, "We'd like to start a new company, and we'll offer you a small percentage of the new company." And I said, "Guys, that's not for me. I think I can do this by myself." Little did I know that in 6 months' time was going to be the worst financial crisis in the history of, or at least in a long-term history since 1936, was was pretty naive doing that. So I ended up starting my own company, which is called Ridgeway Capital, in January 2008. And we had a good 6 months up until September 2008. And then the Lehman Brothers, the financial crisis came, and the financial markets, particularly for the types of managers we were able to source at that stage, would tended to be small to medium-sized managers, really closed down. So in hindsight, we should have stopped working and gone on holiday to the beach for 2 years. But that obviously didn't happen. So we probably worked harder in that 2-year period than I've ever worked in my life. It was our company. It was a new company. We were surviving by the skin of our teeth. And it was difficult. It was really hard to fundraise during that period. But I reacted to, I had a conversation with a large pension fund from the Netherlands, and they explained to me exact type of product that they were looking at. And luckily, my broker-dealer, whose office I was in New York at the time, just happened to have a product of that nature, which was a fund called Waterfall. It's a structured credit fund. And the stars aligned. And this pension fund then ended up investing $500 million into this fund manager. So the stars really did align, and that created a windfall that allowed us to take the pressure off, and allowed me, which I'll get into, to take the step to move to Brazil.
Perfect segue. You did it for me. Why Brazil? Like so you told me, obviously, back in your Tara Capital days, you had your first kind of foray into Brazil, your first trip to Brazil. Give me some of the reasons why you wanted to get back so eagerly.
Yeah, so I think this was now we're skipping forward to kind of 2012, started 2013. So I decided to come down to Brazil. I was still partner of Ridgeway Capital, the firm which we started in 2008, co-founder. Came down to Brazil, and what I found was there was a big disconnect between local fund managers, very established fund managers running billions of dollars in assets with large teams, and having the inability to raise capital internationally. On the reverse side, what happens in the US, if you're a small placement agent, which Ridgeway was, we had 10 employees, is that if you start growing funds and being successful in a fundraise, you ended up cannibalizing your business, because at some stage, the managers don't want to pay you 2% or 25% of their fees to take them from Park Avenue to Fifth Avenue. So there's a cannibalism that happens of your managers. So you're always trying to find new managers.
Got it. And now you've got all your investors investing in the same managers. They don't need to invest into the same, another kind of carbon copy of what you've already invested in. So you, like you said, you cannibalize stuff. Really interesting. And you saw obviously Brazil as, I mean, was it like literally shooting fish in a barrel? There was no one in your kind of your ilk and your pedigree raising funds, for these types of managers.
Yeah, exactly that. So the case being a different case. So where we'd seen a shift to over the financial crisis, where people want to invest in big managers with big teams, with AUM, with 5-10 year track records. None of there was a plethora of managers in Brazil with that type of profile, and they were not being serviced to attract international capital. They had a lot of capital locally, onshore in Brazil, in reais, but they were not accessing international capital at all, or very well. So eventually, after some tough discussions with my ex-partner of Ridgeway, I ended up selling my stake in the business and moving to Brazil to start the Brazilian Brunel, what is now Brunel Partners, which is a dedicated placement agent for Latin American fund managers.
Which is exactly where I kind of met you. No, it's an incredible story. So what was the first set of conversations like with those investors, right? So because you hadn't sold them Brazilian funds since Tara Capital, right? So you've now in Brazil, you're now going back to your investors that you've been selling probably domestic credit products to in the past.
Exactly.
And you're bringing these nuanced niche managers in an emerging market. And let's be honest, it was barely emerging back then. I mean, now we can call it an emerging market, but Brazil 10 years ago was not where it is today. So how did those conversations go in the first instance?
Well, Actually, so if you remember, yes and no. So probably it was easier to sell Brazil 10 years ago than it is to sell today. That's the reality.
Okay.
So, and that maybe is also a reflection of what happened down here. But if you look at when I first moved down here, and you have the Economist magazine, which is very famous from 2013, which is the year I moved here, you'll see the Christ statue in Rio in a takeoff mode. And it was, I think the title of the Economist in that time was Brazil Takes Off. And there was a huge flow of capital from international markets into the region. So whilst it doesn't look so obvious now, at that time, there was a lot of demand for Brazilian opportunities, and there was no one really servicing those investors. So a lot of the endowments were increasing allocation here. A lot of the family offices were starting to invest. And so, you know, there was a, to me, it was a pretty clear opportunity that there needed to be a professional service to help these fund managers.
So you bring these managers. Which are the managers that you selected? How did you select those managers? Was it kind of like just pick one, or were you very specific?
No, so it comes back to what I said before. So we were at that stage, because I had already been doing this for by then 10 years. And so I already had a track record. I already had, you know, a lot of investors I was working with, so I could be selective. And so I was really looking for that niche where, again, the manager's not a new manager. He's an established manager with team, track records, AUM, performance, but only has local capital. And so we can then go in. What we don't want, and we still to this day don't want, is we don't want a new fund manager. So we're not interested in, you know, new managers that are just popping up. They need to have those criterias.
Need to be
and I was very lucky to stumble across one of our major partners, which is Jive, Jive, in 2012, and helped, started engaging with them, started roadshowing with them, and was able to help raise their first fund, which they raised in 2015.
And I've been on your roadshows. It's incredible what you can do in Sao Paulo and obviously offshore as well. We did 30 meetings with you in 3 days. It was one of the most intense. And what I got from that, and I tell everyone that I meet, how impressed I am with the population of Brazil. It's young, it's humble, they're well educated, they speak perfect English, but it's just the way that they are attacking these problems. Going back to what you said though, which was really interesting, is they did need some polishing, right, and some professionalism, and it's just because they haven't really been doing it for that long. It's just that simple, right? So professional services firms, I can see them doing incredibly well in markets like Brazil as these established managers become ready to be shown internationally. What else do you love about Brazil in particular? We talked a lot about obviously the opportunity from a financial standpoint and the returns, but what else do you like about Brazil as a region?
There was just the start of really the venture capital and investment universe happening down here. Being involved in capital markets, I was very lucky because I was being able to have great flow and see a lot of access to these companies. So I was even able to get, and be the first investor in Banco Neon, which is now a $2 billion company, which I subsequently sold my stake in and had a very successful exit. Other companies like ZDog, which was a pets retailer, which I invested in, which we sold to Pets, a listed company here recently, and many other examples where just being in the market down here in a population of 200 million plus people, one of the largest economies in the world, and being able to have a open mind to looking at opportunities has just been phenomenal in terms of deal flow.
Yeah, that's so important. I mean, obviously, with a younger population, all getting online, phones in their pocket, internet, telecommunications improving, you've got a real impressive and fast sales network now. You're a huge hungry consumer, which is obviously ideal for anyone going into those types of spaces. We talked a little bit about kind of the opportunity in Brazil, but let's go down a little bit more into like kind of the numbers, because obviously one of the things that we see is you're bringing investors overseas into Brazil for oversized returns. Can you give me some of the idea on the actual returns that is kind of commensurate with investing in Brazil in particular?
Yeah, so I think it really depends per asset class, but the general feeling is that people are looking for a significant spread over what they can get in Europe or US in terms of returns. Investors do not come to Brazil to get paid the same returns that they would expect in the US or Europe. That has been a challenge over the years because whilst the returns are historically very good in BRL, in local currency.
Can you give me a percentage? Like what you're getting?
It really depends. But I mean, even in terms of credit deals, because interest rates are so high here, running at 14%, and whilst they were less over the last few years, you're looking at kind of high yield deals in the mid-20s. We work a lot with an asset class here in Brazil called precatórios, which is something we could go into, but it's legal claims against the government.
Yeah, give me a little bit more of a definition on what a precatórios is.
Yeah, so precatórios is basically a legal claim against the federal or state government in Brazil. Can be for many different reasons. The asset becomes what's called a precatório once it has been a fully won and awarded case in the court of law in Brazil. So it basically becomes a credit against the federal government or the state, individual states, where you are due to receive the capital within a 2-year period. So the government has to pay within a 2-year period. And there's a very active market in Brazil for buying these precatórios in the secondary market. I think there was maybe 80 billion reais worth of precatórios settled last year. And, we've been extremely active in that space. And returns there are somewhere between 30 to 40% in local currency.
But the thing though that comes out of that is why not invest in Brazil if you're getting 30 to 40% returns? Why isn't everyone investing in Brazil, and why do we only have 60 billion in FDI going in there instead of 160?
Yeah, so I think what we've seen is the people that have made a lot of money for foreign investors over the last 6 or 7 years in Brazil has been the more special opportunities and niche investment managers. So people doing precatórios, people doing high yield, or kind of more structured deals. The private equity markets in Brazil, generally in dollars, have not performed well. They've underperformed the US. So if you compare your average private equity fund, when I say private equity, I mean kind of traditional private equity, buying companies, growing companies, and then reselling. If you could compare them to what you could have got in the US during the same period, you're better off investing in US. The returns in dollars in US is much better. So that's why, and most of the private equity money in the world invests in this kind of buyout or growth strategy, which has not performed well in Brazil. The other major factor is the currency. So I think the currency is what has killed or does kill most deals. If you look at deals in BRL terms, they can be very attractive. If you are willing to leave the currency unhedged, then great. Unfortunately, 90% of our investors are not willing to run that risk and want to have a hedge strategy. So finding a suitable hedge strategy which can reduce the cost and the volatility and get the spread between the BRL and the US dollar returns as close as possible is a game changer, right? So this is probably the first question that people have is on the current, and rightly so. The opportunity set is in Brazil. There's opportunities in agri, venture, real estate, precatórios, but the currency often kills the transactions.
Really interesting. Yeah, obviously, that's our kind of reason for hanging out. That was one of the things that we wanted to go out there and solve. One of the things that I've noticed, especially with the Brazilian managers that we've worked with, is that they want to take their products overseas and they're willing to try new things. They're really to try to give insights to their fund. We talked a little bit about your personal investments. What's exciting you right now? Maybe we go fund managers or strategies that you're excited about? You already mentioned a couple of kind of nuances there, but let's start with the funds, and then we'll move into your personal investments.
Yeah, so I think funds-wise, for Brazil in the next 12 to 18 months, I think we've got to be again in the special situations or distress space, because if you can generate private equity type returns, so 25, 30% or 30% plus returns without any kind of exit risk, or depending in the growth of GDP, or performance risk of the asset or operating risk, and you're looking at self-liquidating assets which have kind of a credit profile, and you have shorter duration, I don't see why you really want to be going into private equity, at least in the mid-market. I think on venture, because on venture, obviously, if you get a home run like our friends at Nubank or the investment I did at Neon or many other stories here in Brazil, then you can speak about 50, 60, 100x type returns. That's something different as a portfolio investment. But I think, generating 25, 30% returns in credit type investments is the way forward in the next 12 to 18 months.
Okay, so we talked about the funds that you like. You obviously segued a little bit into the VC market there. We talked about the huge audience these banks, these new banks have, and these new retail stores have, an online presence that these stores can get. What industries are exciting you from a portfolio company standpoint?
So on the investment standpoint, one of the things we didn't cover, which is important to always go back to, and what has been a big benefit for Brazil through this cycle is the agribusiness. So agribusiness in Brazil is roughly 28-30% of the GDP. So it's a pretty significant and important business. Brazil is the largest exporter now of soya. I think it's about to overtake the US in terms of cotton. It's vast. And
meat as well, right? You have obviously JBS, a huge meat
and a lot of also commodities, and then we can go into the available land, which is not Amazon still, the available natural water, which is becoming more and more important. So anything which touches agri is quite interesting, either technology or other businesses which are related to agri. So we're looking at a few things there. We're looking at a trading company, which is a specialist grains. So they actually focused on sesame seeds and other specialist grains, which are the additional harvest that soya producers can plant to replenish the soil and make the soil that they have be used in off cycles. So it's an interesting business and been growing, very quickly.
So agriculture's blowing up. I had no idea. I know that you've obviously, I know agriculture is important. I didn't know that there's all these different kind of nuanced businesses and technology businesses that can come out of the back of that. It's really interesting. What else are you looking at?
So one of the other sectors that we invested in probably 12 months ago is the business is actually a fantasy sports business as it stands today, but the play is actually on the opening up of the gambling market in Brazil. So if you follow what happened in the US, particularly with a company called DraftKings, I don't know if you've ever heard of that business, but they were started as a fantasy sports league competition business with the mindset that certain states which have taken place legalize gambling in that space, and they convert their fantasy sports players into gamblers. So Hey de Betica, which is the name of the company, has the same mindset. They have 2 million or close to 2 million active fantasy sports players on their fantasy league in Brazil, which is football or soccer, or whichever part of the world you're in. Business has been going great. They offer prizes. So you can, if your team is the best team on a weekly basis, you can win a holiday, or you can win a car, or you can. So in essence, people are already gambling, but they're not actually gambling in the way which the government doesn't allow. It's prize based, and the rules or the legal situation in Brazil is likely to change next year. So this company has been growing great. has done a couple of rounds this year, backed by some very serious venture capital players, and is very well positioned to attack what I think is considered as the new frontier on gambling markets, with, again, the population of 200 million people, football, soccer being a huge sport here, but also other sports are meaningful. And it's very exciting. So we're pretty excited by that company, and have already seen some significant markups on the name.
So we talked about Brazil a lot. Tell me about the investors that you're speaking to, and any other regions that they're looking at outside of Brazil that's exciting to you.
Yeah, so I think Brazil is not perfect. I'm not going to try to sit here and say everything works perfectly, but when you think about the acronym that was created in 2008 by Goldman Sachs, which is the BRICS, and you look at it, and when I speak to investors, we're in a pretty sorry state in terms of that acronym and being able to invest in those other regions. So if you look at some of those letters there, so you look at Russia. Russia is obviously uninvestable right now. They've also made Eastern Europe, unfortunately, given what's going on, uninvestable, in my opinion, and in a lot of investors' opinions. Whether that comes back in the next few years, who knows? China also, at least in private markets, I think became, for almost all of my investors that I speak to, uninvestable. What happened in the education space last year was really concerning to people putting money into private industries there and into certain sectors that the government could take over. And then, of course, you have India. India is a huge country, $1 billion plus population, has a lot of good things going for it, but I feel like it's even more complex than Brazil. So Brazil, is standing out as one of the few major emerging markets with 200 plus people population. 30% of the GDP comes from agriculture, has huge oil reserves, has a lot of the things that are needed to be successful. So I think as investors think about allocating to emerging markets, Brazil is one of the few names out there of size that is investable.
Yeah, I think that's a really good point. And one of the things that I see with just the way that I work with the clients, open banking is a key thing. Obviously, Brazil is really focused on the open banking, the challenger banks popping up, the new banks of the world, and the Bank of Neons. That's allowing people to invest and move money around and build wealth and set up corporate accounts and actually transact and do business, right? I mean, and open up business accounts, right? So I think that's a big part. And I know Indian banking is improving, but Pakistan, for example, is really struggling with that. Obviously, with the sanctions on Russia, you're not going to be able to get money in and out of the country. So I think that's a really important thing to take into consideration: is which countries are able to accept international investment, and can that investor get that money out easily, right? So forget about the currency risk and the hedging requirements and the fluctuations in the currency. Just actually physically moving the funds around the world can be difficult. So what I've heard is that BRIC doesn't work as an acronym. We need to find a new acronym. What countries are you putting in? So Brazil stays in. What else are you going to put in there?
So I think we probably need to add another one for Latin America, which I think would be Mexico, even though the recent government has not been that loved and performing that well. I think Mexico, being close to the US, large population, second largest population in the region, is well positioned to benefit over the longer term. And then I think if you're looking towards Asia, I think you could look at some of the countries benefiting from potentially money coming out of China and moving towards their manufacturing abilities. Places like Vietnam and Thailand and Indonesia, I believe, will benefit from inward flows. And we've seen investors picking up investments into those regions. That said, these still remain all small markets, so it's tough to do big tickets in those regions, but there's plenty of opportunities there.
Right, so we don't have an acronym. I don't know if I could make a word out of BIM.
Well, there's
more vowels in there.
Yeah, there's a curveball which I'd throw out there, and it's just something we're monitoring at Brunel, because we are Brazil focused, but we do cover LATAM. And I think that curveball is Venezuela. So it's way too early. We're not investing there yet. We're not raising money for anything from there. But we have started a few discussions, and someone you should probably include in your future podcasts with some Venezuelan private equity managers that, they have, if they can ease the restrictions there and get a few of their ducks in line, they have everything in place to really grow that economy. I mean, I think they're producing 700,000 barrels of oil a day at the moment. They could easily, with not that much investment, given that it's mostly onshore oil, grow that to 3.5-4 billion barrels, which is, I think, where Brazil is at the moment. And, that alone would give so much fuel to that market that I think, there will be certain industries related to the oil and gas exploration servicing businesses, other industries that will be very well positioned to profit and grow significantly. But like I said, for the time being, it's still risk off there, but I think it's a good market to monitor and be aware of if you're looking at and prepared to look at kind of more real frontier emerging markets.
So what I'm hearing is invest all your money in Venezuela.
Go long Venezuela. Yeah, I think the bonds are trading at 9 cents. So there are some investors of ours that are also, buying them as well, and see that as a good risk reward trade. So we like to monitor those things. Argentina, also interesting, but Argentina is much more complex. Venezuela is as well, but Venezuela has, one really important asset, which is the largest proven oil reserves in the world.
Love it. This is so helpful. What I love about talking to people like yourselves that have this expertise, and you're living in the actual now, right? You're buried in Sao Paulo. You get to travel around. You're in the melting pot that is Sao Paulo, and you really have that incredible, unrivaled experience, right? You're living and breathing Latin America. Excellent. That's really exciting. I think it's a perfect way to end the podcast. That was awesome. Learning everything.
Great. Thanks, guys.
Thanks for tuning in to Raise and Deploy, the international investing podcast brought to you by Diaglo, the go-to FX platform for global investors. We hope that you enjoyed this episode and are looking forward to the next one. If you or anyone else you know has experience in investing internationally and would like to be our next guest, please reach out to us at jb@diaglo.com.